Hello everyone, today we would be presenting a case on the Sahara scam. Sahara India Parivar was an Indian conglomerate based in Lucknow. It was founded in the year 1978 by Subrata Roy in Gorakhpur. Initially, his business was related to capital generation from public at large by urging them to invest. As his company grew, the Sahara India Parivar group of companies was formed. The chairman of the group was Mr. Subrata Roy. His main business interest lies in the field of finance, infrastructure, housing, media, entertainment, consumer merchandise, etc. The group has been a major investor in sports and was the title sponsor of Indian national cricket team for years, and also was the co-owner of Force India team with Vijay Mallya. The group operates with more than 5,000 establishments across India, with the employee strength of around 1.4 million in total. It was an unlisted company.
Now let's take a dive into the past to see how the scam unfolded. In 2008, RBI debarred Sahara India Financial Corporation from raising fresh deposits. It was shocking for the financial market as Sahara was famous across the nation. The growth of Sahara's empire was always a mystery. Many believed it ran a Ponzi scheme by collecting funds from investors. The group needed continuous flow of fresh funds to keep it afloat. With RBI closing a door on the group from collecting deposits from the people, the group needed a financial instrument that would be out of the purview of RBI but still get access to public funds. Sahara decided to issue OFCDs by floating two companies, Sahara India Real Estate Corporation and Sahara Housing Investment Corporation. OFCD here refers to optionally fully convertible debenture. So Sahara's money making machine could have continued had it not committed another major mistake. Sahara decided to tap the stock market to raise money through Sahara Prime City, one of their projects. In doing so, the company had to file a red herring prospectus and disclose working and financials of other group companies. This is when KM Abraham spotted SIREC and SHIC, and he found out that the money raised through OFCDs was camouflaged as private placements. We'll get into the brief of what is OFCD. OFCD is a type of debt security where the option is given to the holder if he wants to convert his debenture into equity share after stipulated time. They raised around 20,000 crores from over 3 crore investors. That's a huge number. The purpose of issue was to carry out infrastructural activities, namely constructing the bridges, modernizing or setting up of airports, rail system or any other project which may be allotted to the company. As per Sahara, issue of OFCDs was private placement, but the sheer size of the issue makes it a public issue, and the size was huge. Any company taking money from more than 50% has to take the approval of SEBI in doing so, which is a regulator, in which case the company would have to make all the disclosures required as per SEBI norms. The Sahara group had sought money from nearly 30 million investors. Apart from the size and number of investors, another deliberate error was keeping the issue open-ended. Ideally, such issues should be closed within 6 weeks. And here the main thing is that in Sahara Group company kept an issue of rupees 17,250 crores open for 10 years. That's a long period.
Okay, so now we are going to discuss the issues with the OFCD. For raising money from the public entity has to be profitable, have an adequate net worth, and funds being raised need to be limited to a multiple of net worth. This is to ensure that the issuer has the financial strength for prudent use of public money. One of the Sahara firms was making a loss and the net worth of the other was just rupees 11 lakh only. Clearly, neither company had the requisite financial standing to raise thousands of crores of rupees from the public. The money mobilized from the public has to be handled with responsibility, more so when the members are not directly involved in its use. SEBI's regulatory framework requires clear accounting of funds, its audit and the supervisions of end use. The Sahara issue had none of these safeguards. The prospectus simply indicated not applicable against the provisions for most of the safeguards. Public issues require the appointments of registered merchant bankers, collecting bankers, registrars, and transfer agents. In the case of Sahara, no such entities were involved, except a group of entities that appointed millions of agents to mobilize money. The lack of accurate investor details or electronic records has cast a dark shadow on the existence and the identity of the supposed 3 crore investors. Moving forward, OFCD is a debt instrument where interest is paid until maturity or till the investor exercises the option to convert it into equity shares. The debentures have an issue date, interest payment dates, and a maturity date. The OFCDs of the Sahara companies are issued on tap. They had no open or closing date, but have been open for buying since 2008 when they were first issued. Investors can buy them by paying money in installments at any time. The issue looked like a deposit mobilization exercise rather than an issuance of the debentures. Issue of OFCDs by Sahara companies falls short in terms of every other safeguard for investors. These are unsecured, there is no credit rating, there is no liquidity as these are unlisted. There is no demat holding of the paper as well, and there are only accounts or passbooks, no certificates. Still, over 3 crore investors trusted this structure.
In this slide, we'll be talking about the timeline of legal battle between the Sahara and the SEBI. So when does it exactly started? It was started in November 2010 when SEBI barred Sahara from raising further money from the public and deemed their manner as illegal through OFCDs. In December 2010, Sahara appealed to the High Court and they were granted a stay against the order of the SEBI. In the next year, in May 2011, the Supreme Court asked Sahara to furnish the format of its application for its OFCD and a list of the agents that raised the money on the company's behalf. Later on that year, in the month of October 2011, the company was ordered to refund about 17,656 crore with an interest of 15% within 6 weeks, which was raised by it through the OFCDs. After this, the Sahara approached the Honorable Supreme Court against the SAT's orders, and Supreme Court ordered an interim stay on the same in the November 2011. Now the next year in January 2012, the Supreme Court gave time of 3 weeks to Sahara to return the investments made by public, either by giving a sufficient bank guarantee or by attachment of properties. Now further this year, the Supreme Court directed Sahara to refund over to 24,400 crores to its investors. After approx 2 years later, Subrata Roy was arrested by the Uttar Pradesh police for not appearing before the Supreme Court in the month of February in 2014. And in the next month, Subrata Roy, along with the other directors of Sahara, was sent to the Tihar jail in March 2014. Now, after 2 years in May 2016, Subrata Roy was released from the jail on parole. He has been given this parole because of the periodical payments he has been making. So this was the exact timeline of the legal battle between the Sahara and the SEBI. Thank you so much. Thank you.